Innerwear makers have slumped to single-digit growth after a strong run for the past 5 years. What's happened? Are fewer consumers buying premium brands? Take, for instance, Dollar Industries' premium offering Force NXT, which has suffered slower growth at 5%, while the affordable brands managed to record double-digit growth. Or is consumption slowing down, and is that evident? And was the decision to push premium brands made too soon? Let's put all of these questions to the Managing Director at Dollar Industries, Mr. Vinod Kumar Gupta. Mr. Gupta, good having you. Thanks much for joining in.
Good morning.
Are consumers down trading, or is this a blip?
Pardon?
Are consumers down trading? The story for the last 5 years is that the Indian consumer will uptrade. Somehow that premium growth, not just for your company, but for the other brands too, is taking a bit of a standstill. What's happening?
Actually, the trend, what we are overlooking in the innerwear industry in the country is like people are more and more aspiring for the good brands. And the good brands are very few in the country right at the moment. We have also jumped into this premium segment with our brand called Force NXT. And of course, we have to fight with the other premium segment brands in this country, but then still in last 2 years, we have been able to come up with a good number. Maybe not as big as we wanted, but still we are fighting with the ongoing consumer brands in the premium segment right now.
Okay. So how do you think the fight will shape up? I mean, you mentioned, so in your case, Force NXT has witnessed slower growth. Dollar Big Boss and Missy continue to perform well. For Page Industries, true, the volume growth numbers have come off a little bit. Is it more competition in the premium brand segment that is leading to distribution of the pie?
Yeah, competition is already there in the industry, but the competition is more into mixed premium brands like the brands we have, Big Boss and Missy. There the competition is fast, but then still we have been able to manage a good amount of growth in both these brands, Missy and Big Boss. Big Boss right now in our total pie, we have done about 45% of the total volume. And Missy, of course, it is right now it is 7%, but then it is moving at a speed of not less than 25 to 30% per year. And if you count on the premium segment, of course, Force NXT, we are still fighting, and we have come out with a good amount of, say, athleisure segment. We have also come out in Force NXT. And of course, with their high ASP, this is going to make a jump in our margins and of course in the total revenue of the company.
Okay, no, but that is my question, sir. Do you think that brands like Force NXT or Jockey or some of the others now have more competition than was the case 2 years ago? Because I hear Van Heusen making reasonably strong inroads. I think DKNY or FC UK have some of the innerwear brands as well in the premium category. Is there more competition there?
Yeah, the competition is very much fast right now. But we understand that unless and until you are innovative, and if you come out with some innovations in your product and the way you are going to market the products, obviously you are going to gain a good pie.
Okay, so do you think it will start showing in FY20? Was the slowdown or the relative slower growth in FY19, particularly Q3 and Q4, will it get corrected in FY20?
This should get corrected because, see, the interim budget which was presented by the last government, this budget was really a progressive budget, and the final budget is going to come out on 5th of July. And we see a good amount of robust in the market, robust in the sense in the consumer market also, and in terms of investment in the sector.
Have consumers downtraded, Mr. Gupta? Are consumers who may have been buying premium brands starting to buy the mid-segment brands because of whatever reasons that may be?
No, we don't think so. The persons who are really been say into the buying of premium segment, they are still with that particular segment only. And the persons who are there with the mid-premium segment, of course, we don't see any switch over.
Okay. Just one small question on the working capital and the availability of liquidity for mid-sized firms as well. What's been your experience? Is liquidity benign, or is it continue remaining tight?
Liquidity is still very much tight because of the economic reforms. I mean, the reforms which have been taken by the government in last 2 years, that really has hit the segment. I mean, I'm talking of unorganized sector. There is still a dearth of capital into that unorganized sector. Of course, we players, the innerwear players in the country, we are much organized, but then ultimately we will have to deal with the persons who are really unorganized in this sector. So ultimately, this will, of course, get smooth in the time to come.
That should augur well for you, right, sir? I mean, if the unorganized sector has problems, you should be able to gain market share at a faster clip.
Actually, yes, of course, we are going to gain. That's why we have also rested a growth of 11% in the last fiscal. The market is growing, of course, and in the times to come, we understand that this capital infusion problem will get lighter and lighter.
Okay. Last couple of questions, Mr. Gupta. One is, if I look at your financials, while FY19 was a relatively flattish year, analysts project that for FY20, your numbers, and FY21, your revenues could grow at a CAGR of about 13 to 14%. Is that a reasonable estimate?
Yeah, this is a reasonable estimate, and this is the estimate we have kept on a lower side, I mean, which is really achievable.
What are the volume growth numbers when you expect a 13-14% revenue growth?
Not less than 8 to 9%.
Okay. And just one more question on the inventory in the system as well. Conversations seem to suggest that the inventory pileup has been fairly high for most players. Is that your experience too?
Yeah, this is in our case too. There has been a pileup of inventory. This is more because of, in Big Boss and Frozen Next, both segments, we have recently launched Athleisure brand. I mean, Athleisure, we have got not less than 40 SKUs in each of Big Boss and the Force NST. So as and when you are innovative and your innovation is on with the new products and all that, so ultimately your inventory is bound to pile up.
Okay, so then therefore would Q1 also see lower revenue growth or the lower volume growth, because right now the clearing of the inventory would be taking place?
No, the first quarter is really, I mean, it's the peak season for our products, so we don't see any negativity, and we expect a good Q1.
Okay, my final question, sir. You mentioned about 8 to 9% volume growth. You mentioned about 13 to 14% revenue growth. Will all of this come at better margins, and therefore would the profit numbers be better than the 13-14% revenue growth numbers?
Yeah, it should be better because we have already earmarked on a EBITDA rate of 15% in next 2 years. Right now, I mean, the last fiscal we closed at 13.37. But then in next 2 years, I mean this fiscal and the coming fiscal, we hope to achieve an EBITDA margin of 15%. So the ultimate, the bottom number should be good in the next 2 years.
Okay. And Mr. Gupta, if I look at a 5-year scenario, would you believe that because of the growth numbers, you might be inclined to either set up more capacity or have more contract manufacturing handouts being given out? What is the strategy to expand manufacturing or capacity if the growth numbers are indeed going to be so good for the next 3-5 years?
Yeah, in next 5 years, if you look at the growth rate, I mean, a CAGR rate of say 13 to 15% on a yearly basis, we see that we are going to expand through the contract labors, because that is the easiest way to cover up your production needs. Right now, whatever backward integration we are going to stick to that. There will not be any much of capex into our backward integration. So the production volumes, whatever is being needed in next 5 years, we are going to have that through the contractual levels.
Okay, we'll leave it at that, Mr. Gupta. Thank you so much for taking the time out and speaking to us at Bloomberg.
Thank you very much.